Good morning and welcome everyone to the opening bell. I'm your host Nickey Mirchandani and I'm here to take you through the news and cues that we have this morning. A couple of things that are working in the favor. Indian equity markets right now are likely to get a muted start in sync with most of the Asian counterparts. Talk about GIFT Nifty signals flattish to mildly positive start for Indian equity markets. US market were closed on account of July 4th holiday. Asian markets edged lower in subdued trading following a holiday for US markets. While investors look ahead to release of private surveys on services in China and Japan. If we talk about the highest LV, that's been seen in Voltas, L&T, Power Grid, Ramco Cements and Pidilite Industries amongst other. Let's talk about FII trend. Bought shares to an extent of around 2,134 crore and DIIs, they've sold shares worth around 785 odd crore. In a bit of disappointment there for the primary market, PKH Ventures has withdrawn IPO due to lackluster QIB response. Well, let's talk about FNOQs. 34 stocks have seen long build-up. These includes the like of Punjab National Bank, India Cements, Titan Company, Bajaj Finance and Emphasis. Almost 53 have seen long unwinding. These stocks include the like of IDFC First Bank, Torrent Pharma, Aditya Birla Capital, MRF and ICICI Prudential Life. 74 of them have seen short build-up and these include Eicher Motors, Bata India, Atul, Aarti Industries and Info Edge. Almost 28 of them have seen short covering activities and this includes the like of HDFC, Naveen Fluorine International Bank, Bank of Baroda and NTPC and TCS. Let's talk about the stocks which are currently under FNO ban. And NSE has retained Indiabulls Housing Finance within that list. There are a couple of stocks that I'd like to talk about this morning. And this includes the like of Suzlon Energy, IOC, Aurobindo Pharma, LTI Mindtree and mid-cap banks which have come up with the Q1 updates. But let's understand and address the fundraising plans by two of the companies. Suzlon Energy first for you. The company is expected to consider fundraising on July 7th. Board is going to be meeting in for that and they're going to be seeking an approval of the shareholder. Do bear in mind the fact that the stock has already run up substantially, over 100% in the last 3 months and has come up with a right issue in 2022. So this is over and above what they've been raising in terms of capital and that is just a testament to see how the market appetite is panning out right now. IOC, that's another one that you need to keep on your list on. The company is going to be considering in raising of capital via right issue on July 7th. It's the same date. Som Distilleries, that's another one for you. It's going to be considering in the fundraising via equity warrants on July 8th. The funds will be used for capex and working capital requirement. A bit of subdued start for HMA Agro out there. There is a disappointment coming in for PKH Ventures, who's withdrawn IPO. HMA Agro, which is now a listed company and has just managed to scrape through the demand response in terms for this IPO. Nomura there has offloaded 0.93% equity in the company and has sold off around 4.66 lakh shares overall in the company. The shares have been sold at an average price of around 626 per share. LTI Mindtree along with a couple of others. As per the NSE circular, these are the changes that are going to take place in the indices. LTI Mindtree is going to be replacing in HDFC in Nifty 50 from July 13 on account of that merger record date. LTI Mindtree now, as anticipated, shifts in and replaces HDFC Nifty 50 index. JSPL, that's going to be replacing in HDFC in Nifty 100 index. That's another one. And LTI Mindtree in Nifty Next 50. LIC Housing Finance is going to be replacing in HDFC in Nifty Financial Service Index. A couple of Q1 banking index there out, sector updates out there for you. First one is Bandhan Bank, where loans and advances have grown by 6.7% year-on-year basis. Loans have fallen by 5.5 sequentially and total deposits increased by 16.6% overall year-on-year basis. Let's talk about the other banks that we have. Now also for this bank, the CFO has resigned. So So do keep an eye out for Bandhan Bank out there. Let's talk about AU Small Finance Bank, where the cross advances overall 29% jump there year on year, and it's registered 27% uptick in terms of the total deposit. Meanwhile, if you talk about the deposits, CASA deposits, that's up by 14 odd percent. And RBL Bank, that's another one for you. The bank has registered almost 20% year-on-year growth in gross advances. Bank's total deposits has grown by 8%. So you're seeing a bit of everything in terms of the Q1 update, which is coming from the banking sector overall. But, we are going to be discussing about the strategies and the daily updates that we have on the charts perspective. And to join us to take the discussion forward is Rajesh Palviya, joining us this morning. Good morning there.
Good morning, Nickey.
I'm going to start off by asking you about your assessment overall on Nifty. The strategy that, the investors can be, market participants now can be looking at given the FNOQs.
So overall, if you analyze the setup, it's on the bullish side only. Yes, there is a concern that PCR ratio is clearly indicating that we are in overbought territory, but this could be a behavior of the market. We may remain in overbought as we are in bull run, and very strong buying action from FIIs, DIIs happening on the day-to-day basis. So it clearly shows that we may remain on the overbought territory, and market can continue and consolidate at higher level, and stock specific action is going to play out in this kind of market. Looking at the data setup, Nifty has witnessed long built up in the previous session. Very strong put writing activity was there for 19,300 strike, which clearly shows that base has shifted higher now. 19,200, 300 could act as a good support area for any kind of minor decline. On the other hand, call writers have covered their significant position from 19,300, 350 strike. So we expect, furthermore, upside is going to continue on the Nifty. So just to play this up move, we are initiating here to buy 19,350 call option, which was closed at around 78 rupees in the previous session. We are projecting target of 130 to 140. Keep stop loss of 55. We are projecting Nifty target of 19,550 in the continuation of this uptrend. There could be some supply pressure around those levels. So as of now, your stop losses should be around 19,300 and hold your long position for Nifty.
Sure. There are a couple of banking updates that have come through. Have you had a look at anything like a AU Small Finance Bank or Bandhan Bank for that matter? It's a relatively soft quarter coming in for Bandhan Bank. And if you talk about RBL Bank too, it seems like the loan growth has moderated YOY basis there. Any update on how are the charts looking like for the banking mid-sized banks specifically, which have started reporting in their Q1 updates right now?
So in the previous session, AU Bank has shown good traction, and looking at the near-term chart, we expect that if this stock managed to hold a 760-65 flow zone, then AU Bank can exhibit furthermore upside towards 810 to 820 on the higher side. So AU Bank structure is on the bullish side. If we analyze other stocks like Bandhan Bank is still underperforming, and looking at the data setup, we expect furthermore pressure we can see in the Bandhan Bank as the stock is trading near to its important or critical support area of 230. If it breaks below 230, then possibly this stock can slide further towards 220, 215. So Bandhan Bank is avoid on the long side. Rather, we can open a short trade if it breaks below 230 level in the today's session. So AU Bank one can look at on the buying side in today's session.
All right, so that's the word coming in on the charts of these three banks. If you talk about Bandhan Bank, it's just reiterating the updates for you. It's a soft pre-Q1 update. RBL, the gross loan growth has moderated, and Indices Bank, well, there also there is a sequential loan growth which is strong at 4% versus 6% sequentially last quarter. So that's the word coming in. Indices Bank seems to be the strongest. Bandhan Bank at this point of time seems to have a soft one, and RBL Bank too, where the gross loan growth has been moderating. But Suzlon Energy, they say the bull run is almost coming to an end when you see stocks like Suzlon Energy actually doing well. Are we really peaking out? That remains to be seen. Not a bearer of the bad news there, but do keep an eye out on how Suzlon Energy behaves in the session. Nifty 50, well, we're looking at a mildly, flattish start out there coming in for the markets with a bit of negative bias. Well, it is a decent downtick there. Almost 0.2% of loss coming in for Nifty 50. And we're trading below that 19,400 mark, 350 level. 19,350 level is what has been held on to. Let's talk about the Bank Nifty. Perhaps we're also seeing a bit of downtick coming in. The losses are sharper for BankX. We're seeing loss to an extent of 0.4% coming in for that basket overall. Mid cap and the small cap index for you, well, outperformance seeing in from mid cap index. And also, let's talk about the small cap index just to see if the momentum is also steady and building up in the broader counterparts. Well, that's that in terms of the overall indices check. But actually, let's go and check the sectoral themes out there. IT basket, the defensive pack right now. Let's look at IT first. Well, that is doing well with gains of around 0.5% out there. FMCG is also doing well with gains to an extent of 0.1% coming in for overall the FMCG and pharma. 0.25% of gains coming in even for that index overall. Let's talk about other sectoral indices that we have overall on the chart. Consumption story remains intact. And in terms of other sectoral indices that we have overall on the chart, Auto is doing well with gains of around, more than 0.1% out there. And real estate index, that's been holding up. I beg your pardon. That's the one which has surrendered to selling pressure and how. And we're seeing losses to an extent of 0.4% coming in for the real estate basket out there. Let's address in the top gainers and the top losers just to see how that is shaping up for you. Well, advances 36 and declines 13. Market breadth right now in the favor of advances. IndusInd Bank, like I suggested, that it's a strong quarterly update coming in for that. TV's Lab, Tech Mahindra. These are some of the top gainers that we have on the list right now. Bajaj Auto, ICICI Bank and Infosys are amongst other top gainers that we have right now. In terms of the top losers that we have on the list, just to see where the trend is right now, HDFC and the HDFC twins, which have perhaps surrendered to selling pressure and dragging the market lower. Eicher Motors is another one. And let's talk about Bajaj Finserv, NTPC and Coal India. These are some of the other top losers that we have on the list. But Rajesh, I'm going to quickly come back to you and check with you about Bajaj, the HDFC twins. Perhaps a little bit of correction, or let's just say a little bit of drag coming in on the indices on account of the banking, which in turn is led by HDFC and HDFC Bank. How are you looking at these two right now?
Both stocks are in bullish zone. Looking at the HDFC Bank, some retracement is happening, but still we do believe that if stocks continues to hold above 1680 level, it's in bullish territory only. So this dip should be used as a buying opportunity in HDFC Bank. So 1680, around 1680, you can initiate again buy with stop loss of 1655. For HDFC Limited, the immediate support area on the near-term chart is at around 2790. So this correction again is giving you opportunity to buy again this stock on the downside. To buy around 2800, keep your stop loss around 2765. Again, on the crossover above 2850, stock will resume its uptrend. So both stocks can be used buy in the decline.
Okay, buy on decline. That's the strategy coming in for HDFC and HDFC Bank. Rajesh, I'd like to chat about Suzlon Energy with you. It's a talk of the town. Couple of months that the stock has been rallying. They say the moment Suzlon Energy, stocks like Suzlon Energy start doing well, it looks like the end of the bull market, but not going to be someone who's, the bearer of, just look at it positively right now. Is it like, you've peaked out when it comes to Suzlon Energy, or you think there's more steam to the rally coming in for that one?
So everybody, look at the Suzlon move, and there is always saying in market when Suzlon moves, then market speaks out. But this time it's a different mood of market, and Suzlon is also in terms of the announcement which is coming from the Suzlon management that is giving some bit of confidence. stock managed to give breakout of its consolidation range, and looking at the monthly as well as on the weekly chart, stock is showing stock is moving in up sloping channel, which clearly shows that this momentum can continue further higher. So those who have already bought Suzlon at lower price, they should trail their stop loss at 15 rupees, and maybe possibly this rally can extend towards 21 rupees, where one can again review it or book some partial profit around 21 rupees.
And something like an LTI Mindtree, which is going to be replacing in HDFC from July 13, a couple of change, which is in anticipation, but do you see a further uptick coming in on that one, or much of the news has already been priced into this counter?
So some fund buying can be there in this stock, because most of the hedge fund, Nifty fund, passive fund needs to add this stock, as the stock is going to come in Nifty. So that buying traction is going to come in the stock prices. Though we have seen already in anticipation of a Nifty entrant, we have seen a lot of buying action was already there in the last week. But looking at the overall setup, we expect that if stocks continues to hold above 5200, then possibly LTI Mindtree can scale up to the level of 5500 also in the continuation of this uptrend. So overall setup on the near term is on the bullish side. 5200 should be your stop loss to hold your long position.
All right, so that's the word coming in on LTI Mindtree. Rajesh, we're going to leave it at that. Thank you so much for taking out the time and speaking to us this morning. But coming up next, we have another guest for covering in the fundamental size. A lot needs to be spoken about, especially when it comes to the performance of mid-sized bank. And to take the discussion forward, we have Mayuresh Joshi from William O Research joining us this morning. Good morning there, Mayuresh. I'm going to start off by asking you your assessment overall on the mid-sized banks right now. A couple of updates that have come in. IndusInd Bank seems to be the strongest of the lot for now. RBL Bank, AU Small Finance Bank. Have you had the chance to look at them? And if yes, what are the indicators looking like?
Morning, Nickey. Pleasure to be on your show. No, the updates that have come through have been very, very encouraging. So what we've probably seen as a very positive connotation from Q3 to Q4 continues into Q1 as well. And therefore, the advances growth, the deposit growth for a whole host of these banks that you spoke about gives us the indication that the positive traction for the banking industry as a whole should very well continue. Now, two aspects. One, I think the NIM compression should be there because the deposit growth has happened at a higher rate, and therefore NIMs will remain constrained for the better part of this year unless we see rate cuts. So I think that is something that the banking system is probably taking in its stride. And the second element is the new circulars that have come through from RBI related to expected loss provisioning. So there will be some element in terms of accelerated provisioning that will come through on the balance sheet, which means if an immediate comparison is done on a quarter-on-quarter basis, maybe the pre-provisioning operating profit and the post-provisioning operating profit can probably see some amount of difference because of excess provisioning coming through. But the updates have been fabulous in my opinion. The banking system probably looks very, very robust. And banks generally, along with select NBFCs, should continue doing well from an earnings perspective.
I also want to chat with you about HDFC and HDFC Bank. These are the two stocks perhaps which are taking the market a little bit lower after the rally that we've seen, or rather the record highs level that the market has scaled in the last 4 consecutive sessions. With the mega merger of HDFC Limited and Bank that has already took place, it's shaped up from July 1 and the record date is July 13. How are you looking at this? Do you see a further stream to both these stocks? How would you look at it from a very investor perspective? Sure, the fundamentals remain intact, but how are you viewing these two right now?
So I think once the merger formalities are done and dusted, 3 aspects come through. One, I think the overall size becomes huge. So I think when you're looking at the overall book, it exceeds 22 lakh odd crores, which is far larger than any of its peers. ICICI Bank ranks second, which is almost half at 10 lakh crores. Only SBI probably stands on top at around 31, 32 lakh crores. So I think within the system itself, they're probably going to assume the top 2 positions for the banking system as a whole. The second element is in terms of the entire merger process as well. They'll have a consolidated portfolio, including housing loans, access to housing loans or customers with lower rates as well. And therefore, I think the NIM stability should very well continue. Even for the overall book with the merged entity, both the gross NPAs, net NPAs should be very, very reasonable, as has always been the case. The restructured pie on reasonable terms as well. And therefore, most of the parameters that we probably speak about for the banking industry parlance probably stays put. The third element, valuations have always been expensive for HDFC Bank. And the valuation premium multiple has always been because of the quality of earnings that the bank keeps on posting quarter after quarter. I think most of the issues a few quarters back related to tech, related to few other glitches that they probably faced are way behind them at this juncture. And therefore, it's a portfolio stock, in my opinion. Anybody holding on to this stock should continue holding on. You should be probably bothered with price movements that happen with this stock from a short-term perspective. If you are a genuine long-term investor, this stock should remain on your.
Okay, HDFC has vaulted into ranks of world's most valuable bank. I'm sure the viewers out there are already aware. But Mayuresh, what I'd want to understand from you is the fact that there is a lot of uncertainty which has taken place in terms of the board consideration when it comes to the higher up appointments coming in for HDFC Bank. That is expected to formalize in the next couple of weeks. Do you think that could be a factor which probably will state some amount of uncertainty on the counter and then thereby give market participants an opportunity to lap up these stocks, if at all?
Absolutely. And in my opinion, I think whatever the processes are in terms of the regulatory and compliance requirements, I think they'll probably fulfill it to the hilt. And therefore, once these elements are taken care of, my personal opinion is that the earnings momentum should very well continue. So yes, I absolutely concur. This is one stock that should probably be there on your radar and in your portfolios as well for a long period of time.
Sure. And also let's talk about Suzlon Energy. I was also talking to Rajesh, our technical guest, just ahead of, just a while back, and he was telling me this. The stock has seen an upfront to an extent of 100% over the last 3 months and probably become the talk of the town. It's going to be considering raising capital after coming up with a right issue that we've seen in 2022. How are you viewing this development? And they also say that, when stocks like Suzlon Energy start doing well, you need to be really cautious of the market trend, especially on the upside. How are you viewing this?
Yeah, that's always been the saying, Nickey. Again, I think this was one of the darlings in the previous bull market, and a lot has gone through for wind companies. Obviously, the tariffs were not in their favor for a better period of 2015 to 20. And therefore, I think a lot of balance sheets got deteriorated. So I think it's a clear case in terms of the directives that the government has probably given. 10 gigawatts expected to get added, interstate transmission charges waived off completely. Tariffs are far better, which means at this juncture, the operating leverage should start paying out meaningfully. A lot of these small companies have actually got weeded out in the entire process over the last 5 to 8 years. And therefore, as bidding starts happening, both from the government entities perspective and private operators as well, these companies will very much remain into focus. The other aspect in terms of Suzlon's balance sheet itself, Nickey, it definitely needs repair. So I think as all these functionalities start playing out from a macro element for the sector as a whole, and individually for companies like Suzlon and Inox Wind, as an example, I think numbers will start getting better. And therefore, the street would ideally like to see what order wins come through, how the numbers are shaping up over the next 2 quarters. A large part of the move in Suzlon has already happened. Further re-rating will happen with numbers coming through. But Inox, in my opinion, compared between Suzlon and Inox, probably look better placed, both in terms of expectations of orders coming their way and from a balance sheet perspective, along with expectations of the capacities that they probably have to deliver and execute any of the orders that probably.
Mayuresh, you think, sure, you would agree with the fact that a little bit of caution is, it's already been sensed in equity markets, given even after the record high levels that we're witnessing, the trading volumes remain thin. But if you talk about something like a primary market, which is seeing a galore of IPOs hitting the market, and something like a PKH Ventures not doing well, the IPO probably getting called off because of lackluster QIB response, HMA has barely managed to scrape through with demand of 1.3 times in the otherwise bull market. Do you think a little bit of cautiousness has already started creeping into the market additionally, incrementally, and this probably suggests a correction coming into the markets in the near term? If in all, I don't know what are you looking at by the end of the year targets, but surely if you were supposed to give a mid-year assessment, what's your view going to be like?
So two things. One, I think for the primary market itself, you have to be selective in terms of what companies are probably coming through. Uh, the industry positioning and therefore the valuation positioning as well. So I think it's going to be a case by case basis as far as the primary markets are concerned. For the markets as a whole, on the O'Neill lens, we're in a confirmed uptrend. I think India is one of the best performing markets so far. Earnings are still expected to hold out. Yes, I think from a Q1 or a first half perspective, IT sector earnings will be closely watched out for. But as banking updates are coming through, they dominate a large part in terms of Nifty earnings. Export companies account for almost 30%, and you slowly and steadily seen resilience in export markets, though there might be chances of a mild recession coming through both for the North American and the European markets, which will have a say. But I think this is a year of consolidation, in my opinion, for the markets after the huge run that we've probably seen. Will profit booking come through? Will there be pullbacks in the market? Absolutely, yes, with the run that we've probably seen. Does that mean valuations are way out of whack at this point of time? I probably don't think so, because if you probably assume Nifty earnings on an FY25 basis around 1,050 odd rupees, you're still talking about an average Nifty price earnings ratio of 18 and a half times, which makes the base case scenario of almost 18 and a half thousand for Nifty, as the case may be. So my opinion is that pullbacks, if they come through, will be healthy for the markets. Certain pockets which have run ahead, if they see some certain elements of correction, will be welcomed by the markets. But I think the markets are probably in fine fettle at this juncture. And if earnings support, my own sense is that after this first half of consolidation that we might probably see, you might see a roaring comeback on any pullback that the markets might witness in the second.
All right, so that's pretty much optimistic, probably statement coming in from Mayuresh. It's a target that we're looking at, a bit of consolidation, and then again, pull back, and then we scale new highs. But Mayuresh, we're going to be leaving. We're just going to leave the conversation on that. Thank you so much for taking out the time and speaking to us this morning.
Thank you. Pleasure is all mine.
All right. With this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching, and please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.